I think the market is spooked by the possibility of the speed of what the Fed may have to do. You know, it wasn't that long ago that Fed Chair Powell was saying rates weren't going to go up until, you know, for 3 years. You know, the end of when he made that announcement, the end of 2023. But recently he has started to drop some hints. Not necessarily that the Fed is going to be raising rates anytime soon, but they're certainly going to have to at some point begin to ease back on the bond purchasing program that they've had in place for some time now to support the market. So I think that's making the market somewhat nervous here.
So, Rob, I've been asking everybody this question. Is there a number for the 10-year yield or a range that you think investors will feel good about but will not signal to the Fed that they need to tighten monetary policy? Do you have one in mind?
Well, I mean, right now we're at 1.71%, and I think that area is kind of a tipping point. If we slipped a little bit below that, that would make the investment community feel better. But if we go much higher than that, then the jitters might continue.
So, Rob, where do you see the best opportunity for investors in Q2? Where are you overweight? And do you have any stock names that you think people can kind of look at?
Yeah, absolutely, Frank. I mean, from kind of a macro standpoint, you know, with the Fed keeping rates low, the dollar, that should continue to weigh down on the dollar. So large cap growth stocks in general, with multinationals that do well with a sagging dollar, would be kind of a broad area. And then to get a little more micro as far as certain sectors go that I would like, and basically the sectors that I like tend to have visible earnings growth, good technicals, reasonable valuation, and right now those would be financials, materials, and telecom. And then to answer the second part of your question, you know, some stock picks. In this low rate environment, I think the dividend paying stocks, particularly those that can grow their dividends, should continue to look attractive. And some names there that look attractive would include IBM, Chevron, and Dow. You know, IBM and Chevron both have close to a 4.9% yield. Dow's a little bit lower at 4.3%.
Shepard Smith here. Thanks for watching CNBC on YouTube.